How do we know, Jesse, that that is President Trump's priority?
Well, when Trump met with Jay Clayton at Mar-a-Lago in December, he was going on and on about the dearth of U.S. IPOs and how we need to change that. And Trump, who has made cutting back government red tape a big part of many of his initiatives, thought that that was how we could boost IPOs, get rid of the rules, make things softer for companies. It's mostly regulation that is preventing companies from going public. Now, other people will tell you there's a lot of factors at play.
Well, first of all, is the president right that the number of IPOs has gone down significantly in the United States?
Yes, no doubt. The high water mark for U.S. IPOs was 1996. Some of you who are older might remember that was also amid the tech bubble, so a lot of those companies went the wayside, but the number of IPOs has decreased very significantly.
Yeah, I do remember 1996, frankly, and I do remember the tech bubble. So first of all, it has gone down. Has it gone down in comparison to other similar developed countries?
While we've had a downward trajectory, a lot of companies in overseas markets are going public. So this has not been a global trend. It has been primarily a U.S. trend. Now, you know, the one factor to bring into this is that prior to 1996, I mean, you know, were a lot of companies going public overseas? Probably not to the degree that they were in the U.S.
So it may be the development of capital markets overseas.
Correct.
So let's get to the question you pointed toward. Do we know why we have fewer IPOs today? And is the president right that it's because of deregulation or excessive regulation?
Well, I mean, you know, so there in Silicon Valley, obviously you hear anecdotally that a lot of companies choose to stay private because there's a lot of private money. They can raise money without going public. And, you know, there's a lot of burdens with being public. There's a lot of disclosure rules. There's punishment from shareholders if you miss your quarterly earning forecasts. I mean, we know what happens if you're a public company and particularly if you're a small company and you miss your quarterly earnings forecasts, you know, money is not sticky. So there is a trend towards sort of trying to incubate private companies so that they're ready for the public markets. At the same time, you know, there's probably more companies that are bought by bigger rivals before they go public. I mean, you know, Google, and some other companies like that, they snap up a lot of these companies before they ever go public. So I think it's hard to say regulation. If you get rid of rules, then you're going to see this flood of IPOs. I mean, there was a Jobs Act a couple of years ago that got rid of a lot of the rules, and that didn't lead to a flood of IPOs. So, you know, so it's hard to say.
So, Jesse, we always hear companies and CEOs complain from time to time about SEC regulations. On the other hand, the reason they're there, supposedly, is to protect investors, so they know what they're getting into. They can make an informed decision about their investment. How do investors feel about the possible loosening of regulations, including disclosure regulations pertaining to IPOs?
I think it's a mixed bag. I think that, look, investors, people who buy and sell shares daily, they would like more stocks to trade. The flip side of that, if you are not getting a lot of disclosure from companies, it's difficult to make long-term informed decisions. So maybe the sort of short-term people who are in and out of stocks, they would just like stuff to trade. I think people who have longer-term horizons, it's hard to know what the valuation of that company is if you're not getting as much information.
And finally, briefly, do we have any sense of when we will have a new chair of the SEC?
Well, we think there will be a confirmation hearing for Jay Clayton in March, and my prediction would be that we will have an SEC chair by April.